Well, hello there, Tesla stock. Up 10% to start off the week. That is not a bad Monday. There is a lot of news that we need to cover that is vitally important for you to know as a Tesla stock investor, including some news that is helping to contribute to this 10% rally that nobody is talking about. And this has to do with an actual price increase that could be coming for the Model Y, according to local media reports. We'll give you the latest. What are hedge funds doing? What are institutional investors doing? What am I doing? What should you be doing? Heading throughout this week, we know there's a lot of data and volatile catalysts coming. How could this now affect Tesla stock, given Tesla is almost at $275 per share? We could soon be over $300 per share. If this is your first time to the channel and you have been living under a rock and or the YouTube algorithm has not blessed you with coming across this channel, we keep you up to date and up to speed on everything going on with Tesla stock every single day, as well as the broader markets. So this is your place to be if you like markets or Tesla stock, and hopefully these videos help you make more money. So hit the like button and subscribe to the channel. First thing that we're going to cover here in this video is something that is really flying under the radar today, and it's a new report from local media in China signaling there could soon be a price hike for the Model Y. This says Tesla could start raising Model Y prices in China by over $1,000 as early as October, a report says. Future Fund's Gary Black sees this as very bullish, given small current price gap between the Model 3 and the Model Y. The Elon Musk-led company could increase the price of the Model Y in October, Car News China reported, citing local media outlets. The potential price raises were apparently shared by Tesla's local salesperson. The company may stop the scheme of offering a 3,500 yuan $480 US referral incentive to Model Y buyers this week and then begin to nudge prices higher, the report said. The hike could be only 8,000 yuan to 10,000 yuan, $1,095 to as high as $1,370, they added. Tesla might also opt to pull the plug on the rear-wheel drive version altogether, the report said. The Model Y was Tesla's best-selling EV in China, and it has all the new features Tesla added to the Model 3 refresh, the salesperson reportedly said. The Model 3 price will remain unchanged at 259,900 yuan. Benzinga thinks this is important because if Tesla were to confirm the rumored price hike, it could send a positive message to investors about margin and demand. It could also raise hopes of the company expanding the price increases to other geographies. Commenting on the news, Tesla investor Gary Black said this would be very bullish for Tesla if the China Model Y prices increased, given small current gap between Model 3 and Model Y of about $500 US. So I think this rumor, maybe you could call it news, it is from a Tesla salesperson, so it's probably legit, is having a 5 to 6% positive impact to Tesla stock today. Because just like that article just said, a price hike shows really good demand, and it does show that Tesla has the pricing power to raise prices again. This really flies in the face of what a lot of Wall Street has been associating Tesla with, is weak demand, not enough pricing power, getting to max penetration, when we know all of those things are incorrect. That's why we've been buying the dip like crazy in Tesla, but Wall Street hasn't fully caught on yet. So this is very good news today. The other good news, in which we covered the full report from Morgan Stanley in the last video. If you have not watched that video, I highly recommend you guys do so, because the actual report from Morgan Stanley is pretty hard to actually get your hands on. I tried to go through the traditional way, through the Morgan Stanley research terminal, and it would not let me. So this information's kind of hard to find, and we broke it all down in the last video. So definitely watch that if you have not done so already. But essentially, Morgan Stanley just slapped Tesla with the highest price target, period, There is no other price target that is $450 or higher on Tesla stock today. So this was essentially Morgan Stanley. They had a $250 price target on Tesla, and they raised it to $400. They skipped past $250 to $300. They went all the way beyond $300. They didn't put their price target in the threes. They skipped past that and went to $450. That's insane. Well, technically, they only raised the price target to $400 per share over the next 12 months, but Morgan Stanley's bull case, they think Tesla could reach $550 within the next 12 months. If the markets start to catch on to the multi-streams of revenue Dojo will be able to essentially create for Tesla and the evolution of autonomous vehicles that will be greatly enhanced by Dojo. The fresh recommendation was included in a larger note from a group of Morgan Stanley analysts led by Edward Stanley, who discussed the value of finding plausible, scalable moonshots that have not yet been fully discounted by the market. They said Tesla's Dojo project could tick all the boxes. Dojo specializes in processing visual data and is a tailored tool to solve autonomous operations. He said for that, vehicles, factories, or other humanoid robots. This adds Tesla to a list of companies including Meta, Amazon, Microsoft that have also developed their own proprietary computing solutions, Jonas and the Morgan Stanley team said in a note. By design their own computer chip, custom silicon integration, with a purpose-built hardware and software, Tesla estimates that they can get an approximately 6x cost improvement per unit of computing power due to the much more efficient system, the Morgan Stanley team said. What makes Tesla's Dojo system a moonshot in their view is the fact that true innovation and closing the gap to AI chip giant NVIDIA is a remarkable claim that will require remarkable proof and execution. According to the analyst, including in that it lets Tesla train its models with simulated data as well as real-life data, that's critical in order to teach cars to deal with one-off edge cases. Additionally, the analyst highlighted that Tesla's Dojo efforts could help the company expand beyond the automotive sector in time. Dojo is designed to process visual data that can lay the foundation for vision-based AI models, such as robotics, healthcare, and security, they wrote. In our view, once Tesla makes headway on autonomy and software, third-party Dojo services can offer investors the next leg of Tesla's growth story. And this is exciting, because once you just get to fully autonomous vehicles, Tesla's market cap, I mean, you're going to over 10x from where we currently are, right? You could see a 20x, a 30x by the time we get robotaxis out on the road. But after that, think about the possibilities of robots, but specifically Tesla's Dojo system, training these robots to make real-life decisions. That is something that you just cannot put in code. For an example, if you had robot police out there, there's a lot of edge case scenarios that they would have to be kind of trained for. And I know that's maybe not the best analogy, but I think it's a good way to think about it. Robots are going to be basically using vision autonomy. They're not going to be using code autonomy for robots. And essentially what Morgan Stanley is saying is Tesla is by far the clear leader in vision autonomy. And that's going to lead into robots, healthcare, security, all in due time. So those are the two biggest pieces of news today that is positively affecting Tesla stock. And by positively, I mean really good news, sending the stock up over 10% now at the time of recording this video. Also, this news is really good. It says Tesla doubles China market share while its Chinese EV rivals expand to Europe. In August, China's passenger vehicle sales returned to year-on-year growth as they rose 2.2% year-over-year to 1.94 million, as reported by the China Passenger Car Association on Friday. In August, Tesla increased its market share from July's 7.5% to 13.2% 2%, according to Reuters calculations based on the CPCA data. Tesla sales rose 8.5% quarter over quarter from July. In August alone, Tesla sold 64,694 cars in China while delivering 65,316 of made-in-China Model Ys, according to the CPCA. Tesla delivered 84,159 made-in-China EVs in August, which is a 31% rise from July when its Shanghai plant was shut temporarily to perform the necessary upgrades. Year to date, Tesla has built approximately 625,000 EVs in China, up from 400,000 during 2022's comparable period. So things are not decelerating for Tesla anywhere, especially not in China, Tesla's second most important market. Tesla is not only growing their market share, but could soon be raising prices on the Model Y. And this is going to be a positive for margins as well as the refreshed Model 3. I don't want you guys to forget, the refreshed Model 3 is about 12 times more expensive in China than the previous version of the Model 3. And it looks like, based on Google Trends data, well, the whole Tesla franchise is benefiting from the release of the Highland. And when you net this out, the increase to the Model Y prices that are presumably to come, the increase to the refreshed Model 3 prices, and Tesla cutting the price of the Model X and S, which looks like there's good demand there as well. Wait times in the US have been pushed out another 2 months or so for both of these models. Well, Tesla should actually be able to improve margins quite a bit this quarter, especially heading into next quarter. That's where a lot of these price increases will really be reflective in Tesla's earnings. So that bottoming out in margins and that trough in essentially margins, so margins can start to recover, looks a lot more likely now, just like Dan Ives has been saying for months and Wall Street was ignoring. This news is actually interesting. So it says Tesla in China risk leaving Volkswagen on a road to nowhere. Shortly after taking the most important job in German industry, Volkswagen's chief executive officer Oliver Blum got some bad news. A top executive had been dispatched to China to review the competitive landscape, and his assessment was grim. At the company's headquarters in Wolfsburg, a sprawling factory complex the size of Monaco, he told his new boss that Europe's largest car maker was losing the electric vehicle race in its most important market and had no prospect of catching up on its own. Volkswagen had fallen behind in China during the pandemic, and by the time the country began to reopen, BYD, NIO, and other local brands had doubled the number of hybrids and electric vehicles, with most cheaper and better than Volkswagen's offerings. Half a world away, Tesla has continued to expand and has laid claim to leadership in the automotive innovation, undermining the German giant's cash cow Audi, alongside Mercedes-Benz and BMW. Instead of sleek Audi sedans claiming Vorsprung durch Technik, Tesla have become the choice of customers wanting to show they're on the cutting edge. This is actually quite scary when you think about it. They said, quote, "The auto industry is faced with the question of whether and how we will be a global leader in the future," German foreign minister said at the Munich car show last week. Quote, "For our nation, where the auto industry accounts for a large share of value creation, this is not just an economic issue, but also a question of security." So they're basically saying here, if their auto sales continue to decline, a couple years down the road, the country of Germany could be in a very bad position. That's potentially a problem for Europe's largest economy, which is Germany. Check out this news, which I don't even know if this is news, but a good reason to not short 1.5 billion worth of Tesla stock. Bill Gates reveals the moment Elon Musk confronted him and became super mean over shorting 1.5 billion worth of Tesla stock. A little bit of a blank measuring contest. Tesla's CEO confronted the Microsoft founder over shorting the electric car company's stock last year. Musk publicly mocked Gates on X back in 2022 when it was known as Twitter for shorting Tesla stock while claiming to support climate change action. In a biography of Musk set to be released this coming week, Walter Isaacson writes that in September of that year, Gates spoke to Musk and said he wanted to come see him and talk about philanthropy and climate at a meeting. This meeting was set up for March 9th of 2022. Musk gave Gates a tour of his factory in Austin, which impressed Gates, but still, the two had much to debate while he visited. Ultimately, when Isaacson pressed Gates on why he shorted the stock, he simply thought he could make money by doing so, which Isaacson called alien to Musk. How can someone say they are passionate about fighting climate change and then do something that reduced the overall investment in the company doing the most? Gates asked Isaacson after the Gates visit. It's pure hypocrisy. Why make money on the failure of a sustainable energy car company? Grimes, Musk's ex-girlfriend and the mother of 3 of his children, she's the one that called it a blank measuring contest. Bill Gates probably learned a very important lesson. Don't short Tesla. Tesla's GigaPress supplier, IDRA, posted a photo of what looks to be the 9,000-ton Cybertruck GigaPress. This thing is massive. Tesla Model 3 Highland owner's manual confirms auto shift out of park feature. Similar to autopilot, auto shift out of park is a beta feature that is disabled by default. When enabled, the function allows the new Model 3 to use inputs from various sensors to select drive or reverse automatically. Drivers would be able to see the system's selected drive mode on the touchscreen when the driver's door is closed and the seatbelt is buckled. I would really need to try this out before I have an opinion on it, but just letting the car shift for you might not be as advantageous in certain situations unless you are obviously in the full FSD mode. So I don't really have any huge opinions on this, but it sounds like it could be a good thing. Potential UAW strike could cut production and push vehicle prices higher, according to analysts. It says the auto industry is on the edge as the current 4-year contract between the UAW, General Motors, Ford, and Stellantis for hourly U.S. workers expire on midnight September 14th, which the union's chief has warned of a possible coordinated strike. New vehicle prices may rise by less than 2% if the strike lasts about 2 weeks, according to the automotive consulting firm J.D. Power. Now, I have my own kind of opinion on this, and what I've seen, because I live in Michigan, so I think this is very kind of relevant. I've talked to dealerships. I've went to multiple dealerships now and talked to them about a potential strike. All of them, literally all of them, have told me that we're prepared for a strike. A lot of them think it's actually going to happen. But the dealerships have been ordering vehicles for the last 3 months in preparation for this. So your dealerships are stocked up on vehicles. So what could end up happening is the dealerships will be fine. There will be no shortage of vehicles. But the next quarter numbers for a Ford or GM or Stellantis, for that matter, might be really, really bad. And that could ultimately be to Tesla's benefit. But I think this is more of a direct negative for your legacy OEMs than it is even a positive for Tesla. Although it is slightly positive, it's much more of a kind of bad thing for Ford, GM, and Stellantis. Option activity in Tesla stock today is 59% positive, with about 1,800 orders totaling $578.5 million. You are skewed positive, but you're not as positive as far as the positive order value as you would expect, given Tesla stock is almost up 11% on the day. So there looks to be what I would say cautious optimism. And I think there's this cautious optimism in Tesla because sure, we're getting a lot of great news for Tesla specifically, but there is a lot of negative that could come this week because we have a lot of economic data. And if the economic data is bad, that's going to be a problem and it's going to hurt Tesla stock as well. Before we get into the rest of this video, which will include Tesla stock technical analysis, where it looks like Tesla stock is going from here, as well as the upcoming data and catalyst for this week and how this could affect Tesla stock, I think it's a good time to say, if you guys would like to come trade with me live in real time, I send out alerts every time I make trades, and you can come join the conversation. Well, link down below in the description of this video. Come try it. If it's not your cup of tea, then you don't have to stay, but at least you tried, and you tried to better your financial situation, or at least maybe hedge your portfolio in a time of downside, if that's what comes next for the markets. In theory, you can take those hedges, those profits, and invest back into the markets, back into Tesla stock at potentially lower prices if we do go through a downturn. If we don't, then we're fully positioned for an upside move as well. Kind of the best of both worlds. So today we didn't get much economic data. Tonight you're going to get data out of the UK, including the unemployment rate, employment change, average earnings, average weekly hours, things of that nature. I'm not sure that will affect our markets. Probably not, unless there was some really bad or just really good data, and that's not something I would expect nonetheless. Now, tomorrow's trading day, you're not going to get much US data as well, but starting on Wednesday, that's when we're going to get the inflation report, and your core inflation year over year is actually expected to fall, and your core month over month is expected to remain the same at 0.2%. If core comes in line with these expectations, that is great news. Your headline inflation rate year over year is expected to increase from 3.2% to 3.6%, and your inflation rate month over month is expected to jump massively from 0.2% to 0.6%. That is over 6% annualized inflation. That would be bad news, but I don't think that's the biggest data point we need to be watching this week. Of course, the CPI is always what people think is the most important data that we get, and to some degree it is. But right now in this market, I actually think your retail sales number is going to be as important. It's going to be as important as CPI, if not more important. And let me tell you why here in the next minute or so. Retail sales has a direct correlation to GDP. So depending how retail sales numbers come out, that affects GDP expectations. Now, you're expecting 0.2% month over month retail sales. Last month's number was 0.7%. So 0.7% is like almost 8% annualized retail sales numbers. That's great. GDP, in theory, should look really good if retail sales are up 8% in a year. Well, if we get a bad retail sales number, that could affect the GDP estimates for Q3. And right now, the Atlanta Fed is projecting 5.5% Q3 GDP, and the average consensus on Wall Street is almost 2.5% GDP. This is up over 100% in just the last month or so. So GDP estimates, because of retail sales that we got last month, which were 0.7%, are basically solidifying to the markets there is no recession. We're not even close to a recession with these GDP estimates. If retail sales comes in negative or just really close to negative, this GDP estimate could totally flip. And markets could start saying, hey, are we actually heading into a recession? Is the consumer slowing down a lot more than we thought? That's a possibility coming on Thursday. So I actually think the data on Thursday with retail sales could be the most important. You're also going to get PPI month over month. That's expected to come in at 0.4%. Last month's reading was 0.3%. PPI is producer price index. You can think of it producer price inflation. CPI is consumer price index. Think of it as consumer price inflation. So producer, right, inflation comes out Thursday. That may or may not feed into consumer inflation. So the higher the PPI, PPI is in theory a bad sign for CPI. And then on Friday, you're going to be getting Michigan consumer sentiment numbers, and this just goes mostly off of the market. So if the markets are doing well, consumers tend to feel like they're doing well also. So I'm not going to hold too much weight on that. But even Thursday night at 10 p.m., you're going to get industrial production out of China, retail sales year over year, and the unemployment rate from China. So this data could also be important Thursday night heading into Friday. So although we're getting a lot of good news for Tesla, and this is great for Tesla stock, currently up 10.37%. It's been a very long time since Tesla stock has been up over 10% on any given day. This might be a multi-year record. I'll have to look back at the data. It's been a very long time since this has happened. You were close right here on July 21st, 2022. This is just a spectacular move by Tesla, something that is quite jaw-dropping. But, I mean, in the grand scope of things, we have economic data that could move the markets big. So I think there is some form of a lid to this rally with Tesla until we get through this week. Once we get to Thursday and we get the retail sales number, that's where I would feel more confident in Tesla stock potentially going over $300 per share. Now, if we look at some of the technicals here, the RSI is at 63.39. Overbought is 70 or higher. So you're getting close to overbought levels, but you're not quite there yet, okay? So there is still some room to run on the RSI. And the MACD is now starting to go a little bit more positive. This is something we've talked about quite extensively here on the channel. The MACD, when this yellow line breaks above the blue line, that's a good sign. But when the MACD itself goes positive from previously being negative, historically speaking, Tesla has always seen a very large rally after that. So that's one thing that I can sit here and point to that suggests Tesla stock could rally to the mid 300s, not even the low 300s, potentially the mid 300s, 330, 340, 350. That's definitely on the table here. Now, on a technical basis, this line is very important. Tesla stock has followed this pretty precisely ever since November of 2021. And you've basically got rejected, I should say, not bounced, but got rejected at this point. You're back there again today, ladies and gentlemen. And it looks like Tesla initially had gotten rejected at this level, but you're now above this. And this specific level you need to watch is about 274. Tesla stock's at 274.27. So you're a little bit over that. We want to see over the next couple of days if we can move any higher than where we are right now coming tomorrow. That's a really good sign. Why these levels are important is it's not just lines on a chart. The trading algorithms also trade off of these lines on the chart. So if Tesla does find some more momentum and can make our way close to about 280, that's going to confirm this bullish uptrend, and that could really send Tesla stock a lot higher. But again, if CPI comes in really bad, or if retail sales come in really bad, or if the Chinese data is really bad, or any other data point this week, it will negatively affect Tesla stock. So you're kind of at the mercy here of the markets, but Tesla as a whole, very bullish. And hopefully you have been buying the dip throughout this weakness so far in the last couple of months. So that is going to do it for this video. That is everything you need to know as a Tesla stock investor, as well as the broader markets. Hit the like button and subscribe to the channel to stay up to date with all of these videos, all of this critical information you need to know every single day. My name is Michael Tyler. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.